So this is why we always encourage our business owners that do the cash flow and tax strategy to ping us before they do any hiring, before they make any switches in how much they're paying themselves, because this gives us the opportunity to run some numbers for them. And it's just another reason why having that professional in your back pocket that can help you think through things and walk you through what you don't know can help in maintaining the growth. This week, we're talking about cash leak number 2, which is compensation structure issues. This is a hot button topic, let me tell you, because most business owners know they need to pay themselves, but they don't know how much, when, and in what ways they should pay themselves, especially when they switch entity types. So when they decide to be taxed as an S Corp, there's now requirements that are in place for S Corp businesses. And that is that they have to pay themselves via a W-2. Now, with that W-2, they need to determine a reasonable compensation for their position in the business. So this can be really tricky because you can have negative effects if you go too high or you go too low. So what I recommend to all of our clients is to engage with us if they become an S Corp so that we can calculate the reasonable compensation for you. The reason being is that, one, this compensation needs to reflect how much you could pay somebody else to do the work that you do for the number of hours you do that work. So, seems simple enough. However, some business owners think that this is an opportunity to pay themselves the least amount so they can save on taxes, but that is just putting a red flag on their business for the IRS to audit. So I know we've talked about this before. Typically, S Corp businesses do not get audited because there's so much compliance stuff that is required when you become an S Corp. You're doing a lot more reporting. However, if you were to get audited, it would be related to your reasonable comp, especially if it's too low. The other tricky thing with reasonable comp is sometimes people will then pay themselves a low amount and then take all the additional out as distributions. That can be tricky too, because if your distributions are higher than your reasonable comp, that could also trigger an audit. But if you pay yourself too much in a W-2, you're then prepaying all of these taxes that can hinder your growth as a business. So if you put that salary too high, you prepay those taxes, you now don't have that cash available to do tax strategy. You don't have that cash available to grow the business to the next level. So it can be detrimental just getting this number wrong in general. What we like to do with our clients is set their W-2 at a reasonable comp, and then we strategize with our tax strategy clients how to bring the money they want into their household in tax advantageous ways. And so I'm not going to get into all of that today, but I do want to talk about that because if you go through an audit, that is going to be a hindrance of generating cash. If you prepay too much in taxes, then that's a hindrance in growth. So it is definitely something you want to do ahead of time to make sure that you have the reasonable comp that you need as the business owner. That's one. The next is not considering wage limits and payroll thresholds and QBI eligibility and all of that jazz. It's kind of all in that same realm. The next is making compensation decisions about hiring people without doing modeling and scenario analysis. So this is the most common thing I see happen with business owners is they try to meet market with hiring and they're not considering that they pay the salary, they then pay the taxes, and then they also pay the benefits. And so there are some benefits out there where you are required to do the same for everyone. That all needs to be factored in when we start talking about hiring. And so oftentimes I'll see business owners not take that into consideration and then find themselves in a pickle because they did not factor in all these additional expenses they have to front, and their cash flow starts to struggle. So this is why we always encourage our business owners that do the cash flow and tax strategy to ping us before they do any hiring, before they make any switches in how much they're paying themselves, because this gives us the opportunity to run some numbers for them. And is just another reason why having that professional in your back pocket that can help you think through things and walk you through what you don't know can help in maintaining the growth and the ability to scale your business. So that is cash leak number 2, compensation structure issues. It's definitely one of those things that I talk to a lot of people about on a regular basis. It's definitely one of those things that I review with every cash flow client because I know it can be so trippy. And so if you are not sure you are paying yourself and you're an S Corp and enough first, or you need to be able to pay yourself more, but you're doing it all through W-2 and you need some ideas strategy-wise, jump on a call with us and we can talk about how we can support you in figuring out what works for you.